Hello and welcome. My name is Simon Adoba, and today we'll be talking about trading binary options with a 30-minute strategy. What you see here is daily intervals, that's daily chart. So we're going to switch to 30 minutes chart. This is a 30-minute chart. You can see the market just opened. So we'll be using the Bollinger Bands you see over here and the stochastic RSI here as our confirmation. And we are only going to be making our trades at the overbought and oversold conditions you see over here, this line and this line, and the average moving line you see here. So before we start, we have to back test this strategy, so we have to go back a little bit and make sure it works overall. And it's always good to trade different currencies, not just one currency. It's always also good to change between time intervals, 15 minutes, 30 minutes and hourly, to find the best opportunity that is available. So any cases you see here are not 100%, they just increase your probability of success. So let's just say you open your chart for the day, for today, you want to make your trade. You go to your binary option website, you go to your 30-minute intervals and want to make 30 minutes trade. Like I said, it's always good to trade different time intervals and different charts. So this is the Euro US dollars. You can also use Euro Great British Pounds, Euro JPY and other currencies that is available to you. So you open your chart for today and this is what you see. On the 30 minutes chart, you open your chart for this is what you see. You are going to wait until the candlesticks touches the line in the bottom here before you make your buy. So this is the first touch for the day. It touches right here, and you can see from here it still shows that we are still not at a turning point. We just had a shift in the condition over here. So we are not supposed to make any buy or sell right now, but if we were to make a buy here, because this is what the strategy say, we are only going to be making buys at this line over here and this line over here. So really say we make our first buy over here. After this has given us confirmation to make a buy right when this candlesticks end. That's a 30 minutes candlestick, so wait for 30 minutes, it ends, and then we make our buy right here. And what happens at the end of 30 minutes? We lose. So if we invested $25, that is a loss. So we make a $50 buy here. At the end of the next 30 minutes, we lose again. So we go for $120. So at the end of the third 30 minutes, what happens? We win. And if you are somebody who is conservative or doesn't like making trades without a backup or something else or some other indicator telling you to make a buy besides just one indicator, it's always good to wait and wait for confirmation, because as you can see, when it came all the way down here, if you made your first buy here, that would be a winner. The same way if you waited to make your sell all the way when this one came up here together with this, that would be a winner. But like I said, our strategy here today is to use this line and this line. So after the third trade, we have a winner. So like I said, we're only going to make our buy on this line and this line. But when the candlesticks go all the way to touch the average moving line and comes back to touch this line, we can make a buy again. Or if it touches it and goes to touch this, we will make a sell. So as you can see, this one came up here but couldn't come all the way to touch the average moving line. So we are not going to be making any buy when it comes down here. But this over here goes up here and then touches this average moving line. So we're just going to wait for it to come up here to touch this or that. So as you can see, it keeps moving during the day. It comes all the way to touch this over here. So this is actually our first touch, I think. But this is a doji, so you're not going to make any sell. So let's take this as our first touch over here. So we're going to sell right when this candlestick ends, and that is a winner. Let's keep going. As the candlesticks go down, it does not touch the average moving line, goes back up to touch this. So we are not going to make any buy or sell again. It comes down again. This is a good touch right here. So now as it goes up to touch it, it touches the line over here. The next candlestick, what do? We sell, and that is a winner. It comes back down again. This one comes all the way to touch the average moving line and goes back up. This one did not touch, but this one did. So what do we do right after this? The next candlestick, we sell. It's a winner. It crosses, it touches the average moving line and comes down to touch this line over here. So the next candlestick, what do? We make a buy. It's a winner. It comes down again, but I did not touch the average moving line after this purchase we made. So I'm not going to make any buy down here, because this could go all the way down about 6-7 candlesticks, which is not going to be good for you if you are trading this strategy. So we wait for it to touch the average moving line again. As you can see here, this one just started the average moving line. So the next candlestick that touches this oversold condition line over here, we will make our sell. So as you can see, this emoji over here goes all the way up here to touch it. But I'm not going to make any buy or sell after this emoji. Why? Because emojis tells you that the market is undecided. We are not decided whether we are going to be. We are going to keep going up or we're going to be going down. So we wait. So I'm not going to be making any purchase in this area. But if you are sticking to this strategy and then you make your sell, this is what is going to happen. You sell here. Obviously it went up, so that's $25 lost. You make another sell again, $50. So this is a winner. This is sticking to your strategy. It's still going to win for you. So this one comes down to touch the average moving line. So the next candlestick that touches this line, we're going to make our sell. So I also took hours for it to go all the way back up here to come and touch it. This is the first touch. So what do we do after that? We make our sell here, and it's a winner. So we are actually going to wait again for it to touch the average moving line or this line for it to make our buy. So it comes down. This is the first touch of it touching the average moving line. This one goes up, but it did not touch the line over here. Plus an emoji. So we are not going to making any buy or sell after this candlestick over here. So it comes down all the way down here, and it touches the average moving line, which is very good. So we just have to wait for it to touch this line or that line for it to make our buy. So it touches it, falls 1, 2. So this is the first fall. This is the first time it touches the this line over here. So right after this candlestick, this is where we make our buy here. And what do we have here? $25. We lost. We make another buy again for $50. We lost $50. That is the next buy. $120. That is a loss. That is $280. It's a loss. And then $620. That is a winner over here. This. And like I said, how are you going to prevent this from happening? That is if you look for a confirmation. As you can see down here, this one is right up here. This one, the oversold condition just had a change in movement and it's falling. So if you are sticking to the strategy, this is what you have to do. But if you somebody who's like I said, you're conservative, and then you always look for a confirmation before you make your buy, you're always gonna wait for it to come down here before you make your buy. And by the time it gets down here, this will probably be your first buy, and this is your second buy. So $25, $50, and it's a winner. So it's always good to have a confirmation before you make your buy or sell. So let's keep going to back test the strategy. So we come up here again, it touches this average moving line, it comes back up. It did not touch the line over here, so there's not going to be any buy or sell. It comes down here, touches the average moving line. This is our first touch over here. So the next candlestick, we make a buy. This is our first buy. It's a loss, $25 gone. Second buy, $50 gone. $120. It's a winner. You some profit over there. There is no touch over here, so we're gonna keep going forward. Let's make our last purchase here. So let's see, it comes all the way down here, touches the average moving line. So the next candlestick that will touch this line over here or this line over here, that's when we make our buy or sell. So we keep going. As you can see, this one just touched this over here. So the next one, what do? We are going to be selling. That is going to fall. So we sell on this candlestick. Is that a red? Yes, that is a red candlestick. Even if that is not a red, we make a sell again on the next one, and it's a winner over here. So thank you, and this is the 30 minute strategy that I've been using for the past couple of months, and it actually works for me. And like I said, it's always good to have a backup plan down here or some other indicator together with the Bollinger Bonds to help you make decisions. Thank you.